Let's start with the topic of motors, which I discussed yesterday. An automobile's motor normally costs $5,000 or more. For established automobile manufacturers that have been in business for a century, this is the standard. On the other hand, we can manufacture a motor for $1,000 instead of the $5,000 that others demand. This demonstrates how companies can become stagnant and adhere to antiquated procedures while neglecting to investigate new, more economical approaches. It's incredible that $1,000 can accomplish work that would otherwise cost $5,000. Thus, why and when will the stock rise? It is going to rise dramatically. We are currently witnessing a transition, and this is the bottom. Tesla is creating affordable vehicles and experimenting with robot taxis. We're delving into the opinions of multi-billionaire investor Ron Barron today, who has a daring forecast for Tesla's future. We'll look at Ron Barron's, a longtime Tesla enthusiast, reasoning for watching the stock in this video. We'll examine everything from Tesla's technological breakthroughs in autonomous driving to their calculated movements in the electric vehicle industry. We'll also examine in more detail how Tesla is leading the automotive industry transformation with its data-driven strategy and innovative use of artificial intelligence. Please remember to like and subscribe to Tesla Stock News before we begin. Let's examine in detail why Ron Barron predicts that Tesla's stock will rise sharply. Ron Barron sold a large portion in Tesla a few years ago. He was worried about having too much invested in a single stock, not that he was losing faith in the industry leader in electric cars. Ron is nevertheless upbeat about Tesla's prospects for rapid expansion in spite of the sale. Now let's talk about space. Ron is also very optimistic about SpaceX and believes it will generate returns of up to 20 times over the next 15 years. I think SpaceX is going to make 20 times in the next 15 years, he claims, and we might quadruple in the next 6 or 7. Ron's approach to managing new investments is to keep his portfolio balanced to avoid dilution and make sure that newly invested money doesn't outweigh previously achieved results. Tesla's shares increased by 12% in spite of a quarter that saw the company post the worst cash flow in its history and disappointing earnings. Why? Due to Elon Musk's unwavering hope for the future. The company's future trajectory is reassured to investors by Musk's promises for more reasonably priced electric automobiles. For the car industry, Ron Barron sees it clearly. Electric vehicles are the way of the future. He believes that all cars will be electrified in 10 to 15 years. He contends that as automakers move towards entirely electric vehicles, hybrids will only serve as a stopgap. What does this signify for the overall market and Tesla? Tesla's affordable innovations have the potential to establish new benchmarks for the industry as the globe shifts towards sustainability. Ron Barron's observations point to a dramatic change in the way we think about transportation around the world, as well as in vehicle technology. Investor Ron Barron argues that worries that Tesla may give up on creating a low-cost car in favor of concentrating on robotic taxis are the reason why the company's stock is currently declining. Investors are concerned that Tesla may lose its competitive advantage in the mass-market vehicle market as a result of this change in approach. Furthermore, a Reuters article hinted that Tesla may abandon its intentions to build a new facility devoted to making affordable automobiles. Barron also draws attention to China's competitive environment, pointing out that BYD is the only manufacturer of profitable electric cars, with Ford and General Motors among the others continuing to lose money on its electric cars. He talks about the resistance to change in the automotive sector as a whole, especially when it comes to making cars more cheaply. Barron highlights the significance of providing incentives to encourage creativity and flexibility among conventional automakers. Barron, who has a deep understanding of the workings of the automotive sector, is optimistic about Tesla's prospects and has projected a sharp increase in its stock price. According to him, Tesla's creative production methods and deliberate emphasis on both affordable vehicles and robot taxis would greatly increase the company's market value. Presently, Tesla possesses the necessary infrastructure to produce up to 3 million cars per year, with a significant surplus of production capacity. This eliminates the need for extra capital expenditure and enables them to produce 1.2 million more automobiles at their current plants. With plans to increase overall manufacturing to 5 million new vehicles, this surplus capacity is essential to Tesla's plans. The creation of robot taxes and the lowering of manufacturing costs are essential components of this scaling approach. Tesla can dramatically lower incremental costs per vehicle by increasing output from its current plants, which makes its growth more aggressive and financially viable. Tesla's strategy for using data and its emphasis on AI considerably advance its position as a leader in the rapidly changing automotive industry. With the industry moving towards intelligent and autonomous vehicles, the volume and caliber of data collected become critical. With over 6 million cars worldwide, Tesla has gathered an unmatched data set. Approximately 3.5 to 4 million of these cars are constantly sending new data to Tesla systems. Tesla has a large data set from which to design and train its AI algorithms because to this constant influx of data from various driving conditions and environments. It is impossible to overestimate the importance of this data. It encompasses a range of factors, from straightforward operating measurements to intricate situational data on the surroundings, driver behavior, and vehicle performance under various weather and road conditions. The development of strong machine learning models that are necessary for the advancement of autonomous driving technologies depends on this data. By using more data, Tesla can improve safety and dependability by teaching its AI systems to identify a wider range of situations and react more accurately. Furthermore, Tesla's proactive strategy for expanding its computer power improves its capacity to use this data. Tesla handles current data more effectively and sets up its infrastructure to accommodate even larger data sets without experiencing performance lags by doubling its computational capacity every 90 days. This quick increase in processing power is essential for analyzing data in real time and implementing machine learning models, which are constantly learning and adapting. Tesla is able to do complex simulations and real-time analyses, thanks to the integration of this enormous amount of data with cutting-edge processing resources. These activities are essential for the iterative testing and improvement of autonomous driving algorithms. In order to achieve and maintain high levels of safety and accuracy in autonomous vehicles, this continuous process is necessary. However, the Tesla adventure is far from over. With its ups and downs, every day is a fascinating discovery that adds to its intrigue. Tesla continues to draw investors into its rabbit hole for this reason. Who else is among those who are optimistic about Tesla? That would be Seeking Alpha, today's sponsor. Seeking Alpha is your one-stop shop for the most recent information on Tesla, Tesla stock price targets, Tesla innovation, and everything Elon Musk related for fans of the company and those who have an eye for finding the next big stock market find. Avoid the mainstream media's negative commentary about Tesla. The internet's top pro-Tesla news outlet is Seeking Alpha. Our channel might receive a commission if you click on the affiliate links in the description and make a purchase. I appreciate your help. Tesla is not just focusing on increasing car autonomy with its strategic investments in AI and data analytics. Additionally, it develops new business strategies and sources of income, such as licensing their AI technology to other manufacturers or providing data-driven insights to other industries. These qualities set Tesla apart.